what is bridging finance? Now, bridging finance in a nutshell is money that you can get based on a promise of money that's coming. It's short-term finance, usually shorter than 6 months. All right. It usually comes at a much higher interest rate than like a bond or some longer term finance that will take you 5 or 10 or 15 or 20 years to pay off. But you know, it's quick money, and it's flexible in the sense that you fill in a form, and that transaction is normally secured, or that money is normally secured by some kind of property transaction. All right. Now, who normally uses bridging finance? All right. So here's sort of typical things that, and you get a lot of bridging companies. All right. These are the typical things that bridging companies will give money for. There's a lot of things, a lot of other companies, depending who the company is, they will bridge different things. They'll take different types of security and so on. But I just kind of took the main things that bridging companies will bridge. Now, they also, all of them also charge different rates. Okay. So some of them will charge money for initiation fee, or an admin fee, something around that. And then they'll charge, normally quote you interest on a per day interest or a per month interest. One of the companies that I worked for before, that I got bridging finance before, they will say, okay, we charge 4% per month, but you have to pay for 1 month, and then after that, it's a per day amount. Okay, so if your transaction takes, or that money comes back 1 month and 3 days, you only pay for 1 month and 3 days. If it takes 2 weeks, you still pay for a month. Okay, and it can range anything from of these companies that'll do like even like a 4% per month, which is very important that if you do go into one of these, that it must really be short term, and you need to be 100% sure that you're not going to be stuck with this thing for a longer period, because it can very quickly eat up all your profit in your transaction. Now, one of the things that they do is they'll do it like a seller's advance. All right, what is that? It means that if you own a property and you're selling it, you need some of that, so you're going to make a profit as such from selling your property. Okay, so you still have a bond of 600,000 on the property, but you've sold it for $1 million. So you're waiting now for that money to and it's a long process. It can be a 3 to 6 months process before that seller can get access to that 400,000 rands, right? Because the bank will only give you that money once the property has transferred into your name. So they won't give it to you before then. So what bridging finance does is they will check, okay, how far is your transaction? Have you received your rates clearance? Is everything completed, and now we're just waiting for the deeds office? So they will check how far your transaction is, and then based on that, they will then give the seller access to not 100%, but normally up to 80–90% even of that 400,000. So 300, 350 can easily come to you as the seller, so that you have access to that funds in advance. Why would a seller do it? They would do it so that you can pay your rates clearance, because a lot of times, you know, you sell your property, but you don't have money for the rates clearance, or maybe for your COC that needs to be done, or anything like that that is related to that property transaction. Or even if you want to move house and you need a deposit for your next house, or you need money to move. So all of those reasons are reasons that these guys will then give you some money from your sale. All right. They don't normally care so much what you're going to be using it for, as long as there's enough money that's going to be paid from that transaction, and you'll be able to pay the capital plus the interest that they're going to put on you back. Then that is what they call a seller's advance. So then a mortgage bond advance. All right. So if you, and I personally have done a seller's advance, I've done a mortgage bond advance. So I owned my property in Centurion, I owned it cash. I was going to use that money to build those 6 houses that I was building at that stage. I needed that money for the building work to continue. But then in the process, I realized that the bank realized, I didn't, they told me that there was some sectional title plans that wasn't up to date. So I had to now go and get this up to date. And all of a sudden, oh crap, now my development is going to stand still. I'm going to lose time, I'm going to lose money, etc. And I needed to get access to that money sooner. So then I managed to get a advance on that money to me as a person where I owned a property cash, and now it was going to get a bond on it. Okay, rates and taxes advance, that's the one I was talking about, where you need a clearance certificate and they can release money for that. They can also so this is a nice trick, guys. If you are selling a property but your buyer doesn't have money, right, for the transfer costs and duties. Okay, so you remember that, né? When you buy a property, you're going to pay your bond fees and your transfer fees. Now, I've done this a few times as well. If your purchaser can't afford that, now you're stuck. You're like, now you can't sell your property. But what you can do is you can include those fees in your OTP, and you can tell you can make your OTP in such a way that the buyer is not responsible for these costs, the seller is responsible for these costs. Obviously, you then increase your price, right? And now you can go and bridge that money for the transfer fees on behalf almost of the buyer, and that transfer fees is then paid, and you can actually have a buyer for your property, right? So that's quite a cool way. I've got lots of agents that it's actually an agent that taught me this trick. And I managed to sell a couple of places like that, which I would have otherwise struggled, because you know that the affordable housing market, it's not always easy for those guys to come up with 50, 80K just to for costs in a transaction like that. Okay, there's also some companies that'll do property auction funding. Now, how does that work? You need to know, if you go into an auction, that you want to buy this house for R1 million, but now what are you going to do? If you want to make sure that you have the money to buy that property. What these guys will do, though, that you need to be aware of, is that they will take security over something else that you have. Okay, which means that if you, for instance, have a property that you're owning cash, right? Or cash property, normally they won't do it if there's a bank loan on it. So if you do own a property cash and you want to go to an auction to buy properties there, then these guys will come and they'll say, okay, your property is worth 2 million. We will give you 1 million to go to the auction with. Then you go to the auction, you get the property, you give them the transaction details, and they'll pay that money out to the auctioneers, right? Then bridging finance also is that there's a lot of types of estate agents, right? Shame, I feel for them, honestly I do, because you know they work very hard and then they wait a year for their money sometimes. So it's very hard for them to manage their personal finances, so they would normally also bridge on the commission. Now, then development finance, this is a Prevon specific product as well, and there's not a lot of people that does that bridging. So Prevon is one of the bridging companies that I used before as well, and they will look at, do you have any pre-sales on your development, and then how much money you're going to get from these pre-sales, and they will then fund a certain portion of the development. So I don't know if you guys want to go into the detail on that. I'm not going to go deeply into that tonight, because I think, you know, I don't think there's a lot of people at that point where you want to develop a big thing like that. Endowments as well, you know, so that you can get access to the funds. Short-term business loans. This is also something where, you know, it's like, I need the money for cash flow for my business. They will still take a bond or a access or security on a property that has been paid up. Right, so there's lots of others, guys. These are sort of just the general ones that most companies will do.